We got a lot of data to go over here today. I got my fire engine red tie on because this is going to be fire and be going over interest rates. What have they done over the last 30 years? What have they done over the last 3 years? Kind of the averages there. Also going to get into a big macro picture of the United States, homes on the market, month supply and inventory and that kind of thing. Then we're going to dive into Florida, big macro picture there. And then we're going to dive into Southeast Florida. And the last slide you're going to want to stick around for because this is something I've been talking about. And these numbers are pretty alarming. So the first slide I wanted you to look at here, and it's always good to go back and look at history. So what you can see here is that interest rates right now are at 7.73% on, that's an average since 1971. Right now they're actually, and I'm going to show you that slide next. You can see that the interest rates really have gone down. We did have this bump up here in 2020, right, after 2022 and that whole low zero interest rates, 2% mortgages, 3% mortgages, and then what the Fed has been doing over the last couple of years, raising those interest rates up. So I do believe that we still see a trend going down. Now we're looking for the FOMC meeting coming in this week, anticipating 2 rates cuts this year. I'm going to be getting into some statistics on that. But I wanted you to see this from perspective over the last 30 years, back to 1971. Actually, that goes back even further than that, almost 50 years here, that the average interest rate has been 7.73, and we are under that. Let's take a look here at the next slide. This is over the last 3 years. So this is over the last 3 years going back to 2023, okay? And what we're seeing here is that we're at 6.77. So the average over the last 50 years or so has been that 7.73, and we are at 6.77. So we're under that 50-year average. And right now we're at 6.77. It's been bouncing around a little bit. Now let's take a look. So what did interest rates do kind of towards the end of last year? They were at 2 basis points. The mortgage rates rose to 6.93 during the weekend ending in January 9th. And then they went to 6.72 in December. So you see they're kind of hovering in that high sixes. And then over the last 52 weeks, the average was still that 6.73 that I mentioned earlier. And we had a high of 7.22 in early May. And then in September, it bounced down to that 6.8. Would have been a good time to buy there. But we do believe that the interest rates are going to come down. Why is that? Well, the CME, which is the Chicago Mercantile Exchange, has basically a likelihood that the Federal Open Market Committee, the FOMC as it's called, is likely to make 2 25 basis point cuts. So that would be around 0.5 of a point this year. That's what the betting markets have. The next one is just coming up here next week. And then the Fed puts the odds at a rate cut in June of 72.6. So there's more than a 3/4 chance that there's going to be another rate cut in June. So we're looking at probably 2 rate cuts this year, maybe 3. The incoming administration has said that he wants lower interest rates. So we'll see if he's going to be able to put any political pressure on the Fed. Fed is not supposed to be politicized, but time will tell. What I want you to see here is this is a macro picture. This is according to RedFin. So the median sale price for a single family home, and this was great because this was all of last year. So it goes back to December 23 to December of 24. In the United States, it was $443,202. That was the average median sale price for a single family home. That was up 6.2% since the previous year. So there was in the United States about a 6% appreciation, which is pretty standard for real estate. Across that, some states were higher, some states were lower. We're going to get into a little bit of that here in a second. On the cities that had the highest appreciation. Number of homes sold, we had 309,000. That's up 11.5%. And then the national average was around that 6.7 for an interest rate. As we come down real quick, I wanted you to see the top 10 most metros with the highest, fastest appreciation price. So look at Miami in 2004 was still 40%, even with those high interest rates. Then you had Louisiana, a lot of people moving to Louisiana because of those low prices. Interesting, got Milwaukee, Wisconsin was at 20%. We got, 2 in the top 5, we have 3. So we had Tallahassee, Florida at 19.5. Then we had Pembroke Pines at 17, and then you had a couple others over here, Raleigh and Cleveland and so forth. But Miami and Tallahassee and Pembroke Pines in the top 5 appreciation growing metros in the United States in the top 10. Let's take a look at housing supply. We had 1,146,119 units on the market. Now the inventory went up. We got another about 100,000 units that came on the market. A number of newly listed homes went 218,966. That's up 1.6 from year over year. Median days on the market is under that national average of around 76. So taking around 50 days to sell a home. That's up six days year over year. Month supply of inventory. And I want you to look at this and understand that month supply of inventory is, something that's a gauge to tell whether you're in a buyer or seller market. Under 3 months of inventory is that seller market. Between 3 and 6 is neutral. Over 6 months of inventory is a buyer's market. You can see that, this actually dropped for those number of home sales on the market. So let's look down here at demand. Homes sold above listing price, not like it was the year before. 24% did sell above the listing price. Now, is that the original listing price or is that the eventual sale price? That's something that I would really like to know, because this can be a little misleading if we're like, wow, homes are selling on 24%. Like, that could be price adjustments and then selling over a price adjusted amount. So let's pay attention to that. So then we had home with price drops about 14%. That's around the same that it was in 2023. And sale to list price at 98.5, pretty healthy. So it looks like the real estate market's still holding up pretty well. Now, the most competitive cities, we got California, we got Illinois, Omaha, interesting, Fort Wayne, always interesting, these cities. I always think maybe it's an Amazon plant that went in, or a Tesla factory or something like that. And then people moving up there to Anchorage, Alaska, interestingly enough. What I want you to see here, lastly, is the migration. You can see up here in the burnt red orange, if you will. I'm colorblind. I've been told that this is burnt red orange. We got more than 16,000 people were searching to move to Florida versus other states. So lastly here, top 10 areas people are moving to. California, we got Florida in here. We got Myrtle Beach. We got Maryland. Portland, Maine, interesting. We got Vegas. People like to go out there and gamble, I guess. We got Florida in here again. And we got Nashville and Hilo, Hawaii. People are moving from LA, New York, San Francisco, Seattle, Washington, D.C., that is. Then we got Chicago, Illinois. Then we got Philadelphia, Pennsylvania, Dallas, Texas, Denver, and Boston. So that's where people are moving from. This is Stellar MLS. This is a large MLS that encompasses a lot of Florida. We don't have one that encompasses all of Florida, so this is the best I could give you. This is all properties put together. You can see that there has been a mild ascension in inventory coming on the market, right? And then pretty flat here with the pendings, and still kind of going down a little bit for the solds, especially over the last 6 to 8 months. We take a look at the average sale price going down. We can always go over here to our market highlight. We're down 1.6% compared to last year, but we are 1.6% up in all of that stellar MLS for properties, the average listing price sold. I do want you to take a look at this, because this is the average days on the market. So the average days on the market, you can see, is going up. In that MLS, all those properties combined was 73. Going to be showing you a little bit of a scarier slide here later for days on the market, but days on the market is taking a little bit longer. If we look at our market highlight, we're up 37% for days on the market compared to this time last year, at least December to December of 23. If we take a look over here, a month supply of inventory looks relatively healthy. We really didn't go into a buyer's market, but we were in that kind of lower level of the neutral market. We're at 4.6. It did bounce down from November to December to 4.6. So, we'll see if that continues. We are here in January. We don't get the January numbers until February, and we'll show you them then. Now, what I wanted you to see here is the condos and townhomes, okay? Now, if we back this out, this is 14,000. I think it was 16,000 if we come back. There's not a lot of condos. This is a lot of the stellar MLSs in the middle part of the state, so not as many condos in it. I'm going to show you here in a little bit, kind of a prelude. This is relatively healthy. It looks like it's leveled off. The average price point has kind of dropped down. If we look over here at our market highlight, we're up 4.4% since last month. We're down 9.9% in the average sale price over that same time period, year over year. So definitely pay attention to that. Days on the market, this is that condo market going up considerably more than the average with their single family homes in there. We're at 82, but you can see a pretty heavy ascension of inventory, rather days on the market coming up. And then this is the original listing price, the sale price. People are getting on average about 93% of that original sale price, the list price. I do want you to see month supply of inventory in those condos up a lot more. Now, this is just a prelude to this last slide that I want to show you for month supply of inventory. We were 3 out of those last 4 months were actually in a buyer's market. And then we did just bounce onto the cusp of that buyer or seller market, neutral market rather. Hopefully that trend continues, would be good and healthy. Now let's get down into this area that we cover. This is St. Lucie County. We do cover Indian River County. We got Barton County here, and then we have Palm Beach County. Taking a look, numbers are down year over year. Closed sales in St. Lucie County, we're down 5.2% in sales. We're down 6.0%, 6% flat on the paid in cash, so not as much cash going into St. Lucie County. Median sale price was up to 3%, up 3%. Average sale price, median is the middle, averages put them all together and then divide by the number that you're putting together. So they're up about 4%, 4.4%. Dollar volume, not as many units sold as a total. So that's billion with a B for year over year. And then original listing price to sale price, median time to contracts, taking more days to sell, median time to sell, 15% more. New pending sales is actually down 4.9 in the St. Lucie County. And then new listings on the market is up 10.9, so almost 11%. And then we have pending inventory is actually down to 7.6. Active listings on the market, 33.4. That's up. And then our month supply of inventory is up 41% for those single family homes. Let's take a look over here at Martin County. Martin County, one county south of St. Lucie County. We're at 0.4, so pretty healthy. We're down paid in cash to 0.04, 0.4 as well. Median sale price was up 2.4. Average sale price was up 1.3. And then dollar volume, we're a little bit of a smaller county here in Martin County, pretty much the same at that 1.8 billion. That's all of the units put together to make that billion number. And taking a little bit less, people are getting a little bit less for their properties, but not much, just 0.8. And then we're median time to contract, taking longer days on the market. It was 45 and it went down to 29. We got median time to sale at 19.4. And so it went from 86 days, 86 days down to 72 days. This kind of goes from left to right. It confuses me sometimes. New pending sales were up, so that's good in Martin County, 3.3. New listings coming on the market, 12.4. We got more units coming on the market. Pending inventory is down, or is rather up 3.1. And then active listings is up 40.5% from that 829 down to 590. And then we are up with inventory as well. Nothing shocking there. Went from 3.6 to 5.1. We're up 41%. Now let's take a look here at Palm Beach County. Palm Beach County was at down 4% in closed sales. We're down paid in cash, down 6%. Our median sale price is still healthy at that 5.5. So, and then the average. So remember, so it's a much larger county, larger units sold, but on average, you're getting 12.2% more. That doesn't mean that your house went up by 12.2%. Talk to your agent. We would love to have that conversation with you. Hey, by the way, if you haven't subscribed, please subscribe to the channel. I love doing this kind of content. If you like data, if you made it this far, you obviously do. So subscribe to the channel below and you'll be updated when we have new content that comes out. So back to the charts here. We got median time to sale taking a little bit longer, around 16.8. So it went from 75 days up to 87 days. New pending sales are down 4.2. And then we have new listings on the market at 6.6. And we have pending inventory is down 3.6. Inventory of active listings, not as much as the others, but it is up 23%. So it went from 4,575 to 565. So active listings coming on the market is up. And then, of course, the inventory would be up relative to that as well, very congruent, up 27% for those properties coming on the market. Now, lastly, I did want you to see here, this is a single-family home market in South Florida. around these 3 counties that I outlined. Some of this goes down into Broward as well, some of it up in New River County, but these are properties which we now call, an affordable home. Affordable home is under 550,000, and we're at 4.5. So we're right smack in the middle of a neutral market here. Our average sale price is staying pretty level. So if we look at our market highlight, we're down 1.5% since this time in the previous month. And then we're down 0.4%. So pretty level on each county, or rather all of these counties put together. But at the end of the day, we're pretty healthy. Let's go to our days on the market. It is up 60 days on the market is the average. People are getting on average 93% of their original listing price to sale price. So we're seeing price drops. We're seeing people take less than what they're asking. What does our market highlight tell us? We're up 9.1% from year over year. And then we're up 42.9. We're up 9.1 from the previous month. Lastly here, we put out a month supply of inventory, and you saw that. We're right in the smack of that neutral market. This is the shocker. We can see the inventory coming up. This is condos under 550,000. And all of those in Flex MLS, which is the South Florida MLS that we use. And you can see this inventory of condos going up considerably. This also indicates that we're getting prices are starting to get suppressed. So we had on average for those units under 550,000, we're getting around $250 a square foot on average. What does our market highlight tell us? We're down 0.8% compared to last month, and we are down 4.6. So this condo market is feeling the pressure of all of this. How many days on the market? Oh, we got 79 days on the market. So we're up considerably year over year. We're up 5.3 month over month, and we're up 50% almost in the days on the market. So pay attention to that. If you own a condo, it's just taking longer. Be priced right. I just did a condo market analysis for somebody, and it was like, you're just not going to get what you think you might have gotten. You might have gotten it last year, but you're not going to get it now. So really need to be priced properly. This is the last shocker here, y'all. We're at 10.7 months of inventory in the condos under 550,000. So, this is a full buyer's market under 550 at least. You want to take a look at what your local market is doing. What does this all tell us? It tells us that the condo market definitely is feeling the pressure of the inventory going up, and it's putting pressure on prices. So you really need to be priced properly. Again, if you haven't subscribed to the channel, please subscribe below. If there's other content that you like, or you'd like me to see me do something, please let me know. Until the next time, we'll see you on the next one. And always be careful. Choose a really good real estate agent that understands these numbers so that you can make a good decision being a buyer or a seller. We'll see you on the next video.